Okay, welcome viewers. Welcome to Chapter 11. We're going to be looking at the petty cash account today. Getting to the end now. Let's have a look at today's objectives. We're going to look at the security of the petty cash money. We're going to look at petty cash vouchers. We're going to look at petty cash entries and analysis. And we're going to look at reconciliation of the tin. So petty cash is a small amount of money, usually held in a tin, to make small office purchases or small purchases for whatever business you're working in. For example, for like milk, tea, coffee, you don't want to go to the bank just to buy some milk. Small amounts of stationery, ad hoc travel, bus, rail and taxi fares. So a petty cash voucher. So this is a petty cash tin. If we're going to look at the security, so what you would do is obviously put it under lock and key, put it in a safe, because cash is valuable and people always want cash, and you can easily basically hide cash and get rid of it and basically steal it. Okay, so yeah, we want to keep it under lock and key. So let's have a look at petty cash voucher. So this is what a petty cash voucher looks like. So you've got a signature of the person making a claim. So they've got train fare. What they'll do is they will keep a receipt, put a receipt at the back of this. They've got a petty cash voucher number, and it's authorised by someone. So the person authorising it obviously shouldn't be the person that's making the claim. So we're going to look at the impressed amount. The impressed amount is basically the amount. It's not technically the balance. It's kind of an old name for the amount that it's going to be topped up to. It's basically the balance that it's going to be topped up to, but it's not technically the balance, because the balance is how much is left in the tin, basically, or how much is how much is left in the tin. So that's technically the balance, but the impressed amount is how much it's going to be made up to. So for example, if we had an impressed amount of £100, that means £1,000, that means that it has to be made up to £1,000 each time. The petty cash tin has to be topped up to that amount every time. So for example, for the month, say we spent £300 on tea, milk and coffee, and then 350 on travel. I know that's quite a lot. Travel 350, you get a plane ticket or something, but anyway, it's topped up with the amount of that is spent, which is 650. So bank top up, so we take it out of the bank, put it in the impressed account. So we'll take up some notes from the bank and stick it in the petty cash tin, and then make it back up to £1,000. This is the money in this receipts column, and this is the money out, that the payments column, and these are the analysis columns. So this is analysed petty cash book. So VAT should be recorded when entering into the accounting system. Now you might not, because this is input VAT, so you can claim, because you're making purchases, you can claim it back. So here they don't show the VAT because it's the amount is too small. So you need to calculate it. So you've got £4 and you paid £80, so the VAT amount must be the 80p. So Arena Optical paid for stationery £384 on voucher 47. Received £10 from Florium as change for post. So this is voucher 112. So this is a receipt. And paid taxi fares of £7.75, sorry, and then paid milk of £1. So how will these entries look in the petty cash book? Let's have a look. So we've got the stationery amount, which is the first one, on voucher 47 and £3.84. So £3.84 and 47. And then we received £10. Here's £10 from Florium as on voucher 22 for postage. The taxi fare was £7.75, and the postage was £1. So the postage was £7.75 and £1, and the dates are there. And if we're going to analyse this, we've got VAT amounts of £2.19. We've got amounts for stationery of £3.20, postage. So this is another way that you can analyse the petty cash book. How will they look in the accounts? So you then need to post them into your accounting system. So £6 20 for travel from the petty cash book. Postage £1 from the petty cash book. Stationery £3.20 from petty cash book. VAT from the petty cash book is £2.19. So total from the analysed columns. So we just took it out of the analysed column there. Make it straightforward. So Arena Optical. Arena Optical paid a trade payable out of the petty cash book. Shouldn't normally do this, but obviously £15 not a lot. And Vouchers 51. How will this look? It will look very similar to the other entries, to be honest with you. J Jones, £15 of the payment, and the voucher number is 51. We'll look at in the T accounts. So we've got £15 petty cash book. Restoring the flow. So to restore the cash flow, a cheque is exchanged for cash at the bank and paid into the petty cash. So you debit the petty cash account. So you are increasing the asset, so you've got to debit it, and we're crediting the cash book. So we're taking the cash away from the cash book. So we've got to credit it because we're reducing, or it's negative asset basically. It's minusing an asset. Petty cash procedures. Petty cash should be closely monitored for security reasons. There should be regular reconciliations. It should be locked up securely. There should be authorized. Adequate documentation should be monitored by a manager or supervisor. So normally the office manager would monitor the petty cash. It's quite normal for it not to reconcile actually, because £1 or £2 could just go missing, and people not go missing, but people might not always remember to bring back the receipt, etc., etc. But the person monitoring it should insist. I mean, and if they don't provide the receipt, they shouldn't get their money back really. But people buy stuff for the business, and when they're buying stuff, like maybe they might have went and bought milk. If they don't get their money back, then they could become quite upset. But then again, they should know the procedures to provide receipts. I mean, everyone provides receipts and they know that, but still people don't. Anyway, let's carry on. So reconciliation of the tin. Let's see if you can work out what the impressed amount is for this tin. So we've got the amounts in the petty cash book. So these add up to £49.05. So £49 and 5 pence. And then the amount in the tin, we've got 10 £3 notes, that's £30, £5 notes, £15, got 5 £1. So this adds up to £50.95. So this adds up, this impressed amount must be £100 because it adds up to £100. So if the impressed amount is £100, then this reconciliation would be correct. Obviously if the impressed amount was £200, then there's £100 missing. So it didn't reconcile. But here, I think it's £100. You could be safe to say because of the amounts. So let's carry on. The petty cash book is a book of prime entry. So here we made some entries and then we posted them to the T accounts, which is the double entry system. So it's a book of prime entry. Okay, I'll see you in the next lesson. Thank you for listening.